In with that, let's move on now. As 2017 winds down, we take stock of the year gone by. For the Indian real estate space, 2017 hasn't really been the dream year everyone had hoped it would be. From the lingering effects of the 2016 demonetisation drive to the increased compliance requirements with the introduction of the real estate regulator to a spike in legal action against developers by unhappy home buyers. CNBCTV18's Kevin Lee reports on the many storms the real estate sector has struggled to weather.
Now, it was no surprise that demonetization hit the real estate sector especially hard given the large amount of cash in real estate transactions. However, once reports started coming in at the end of the first half of the year, industry watchers, builders and experts were all shocked as to just how bleak things were.
The sudden and prolonged drying up of the cash component to property deals shook India's top real estate markets to their foundations. The National Capital Region, for instance, saw a 70% drop in launches between January and June 2017, along with a 25% dip in sales. In Mumbai, new launches were at a 10-year low, with sales down 8%. South India fared marginally better, with Chennai emerging as a bright spot, but given that the city saw heavy flooding in 2016, the base wasn't very high to begin with. Overall, the first half of 2017 was the worst period for sales and new launches for Indian real estate since 2012. Real estate consultancy firm Knight Frank's analysis suggests that it would take over 4 years just to sell existing inventory. But plunging demand wasn't the only roadblock for builders in 2017, nor was it the biggest.
20 years of me being in this industry, it was perhaps the biggest day yesterday with the regulator being formed.
Overall, this new act is a very positive development. I think it is going to be a game changer.
This heralded the implementation of the Real Estate Regulatory Authority or RERA, and with it, the very landscape of the Indian property market was redrawn. This is a one-stop shop to address homebuyer grievances and punish developers for unscrupulous activities, and it has meant increased compliance for builders and made the straight and narrow straighter and narrower. The new rules say builders have to pay homebuyers in case of project delays. Further, builders will no longer be able to use funds received for one project to build another. But even as developers grappled with the new regulations, homebuyers threw them another curveball: legal action. Two landmark real estate cases grabbed the spotlight. The first involved thousands of families who had bought houses being built by JP Infratech, which is facing insolvency proceedings. These homebuyers have since been assured that they will not be excluded from the table when the company's lenders seek to recover their loans. Unitech was the other developer to feel the heat. Even as the Supreme Court heard Unitech's case, the Ministry of Corporate Affairs moved the NCLT seeking permission to supersede the company's board to protect the interest of over 19,000 customers.
Now, both these cases are being heard by various courts, but the writing is on the wall. Erring developers are not likely to get away scot-free, and defrauded home buyers have become a big priority. So as far as the real estate sector is concerned, 2017 will go down as the year of the home buyer. In Mumbai, Kevin Lee.
Now we'll be bringing you a recap of what happened in the last 1 year through the week and through next week as well. But for now, it's time to wrap up this edition of After the Bell. Many thanks for watching. Stay tuned though. Markets Today Talkback will take all the action forward on the other side of this very short break.